Here's the difference between loans and credit cards on your credit report. I'll be discussing that in today's video. Before we jump into it, my name is Kenny Johnson. I operate a credit repair company here in Montreal, Quebec. We have clients in every province. If you have collection accounts on your credit report hurting you and affecting you, send us an email, info@kennyjohnsonuniversity.com, and me and my team will be more than happy to assist you. So just go ahead and jump right into the topic. Credit cards and loans, they affect you. They have an impact on your credit report completely different. Now, there's a time and a place for both, but usually you always need a credit card. If you care about your credit, you're always going to need a credit card. And the reason why is because credit cards are going to provide you with utilization. A loan does not give you a utilization. And the reason why is because with a loan, you're giving, let's say, $5,000, and then you're paying that balance down until you are able to pay back the full $5,000 plus the interest that you owe. With a credit card, it's a revolving account. So the limit that you constantly have access to. And so what's ever reported on a monthly basis, that difference is going to be your utilization. And when we're able to keep a low utilization, preferably below 10%, then we have what's considered a good utilization. So with this alone, we get utilization from credit cards, to whereas with a loan, we don't get utilization. Now, why is utilization important? Well, the reason why it's important is because it is the second most impactful item to our credit score, first being payment history. So with utilization, it makes up 30% of our credit score. And so that's why it's extremely important that you have access to a revolving account that's going to report month over month. And once we actually do have a revolving account, it's important that we are never closing these accounts. We want to keep them open for as long as possible, because you understand that credit age is extremely important. It makes up another aspect of our credit score. Credit age is important, so we want to keep our credit cards open for as long as possible. So with that being said, we have utilization with our credit cards, but also our credit cards give us credit age. How does our credit cards give us credit age? They do not come to an end. Okay, they do not come to an end. With a loan, let's say with an auto loan, maybe on average, an auto loan is going to be 5 years, a mortgage is going to be 30 years. Those eventually come to an end. And what a lot of my clients have noticed is that when they had finished their loan, or they came to term and that loan closed and it became a closed account, their credit score took a slight drop. And the reason why is because as soon as you pay off a loan and that account closes, you lose all of the payment history associated with that account. Now, while it's open, it's still having a positive impact for you. But as soon as it's closed, you're losing all of that history associated with that account. So another positive to having a credit card is the fact that it does not close until you, the consumer, decide to close that account. Okay, now when it comes to loans, it's great. The reason why loans are a little bit better over credit cards is because you can get larger amounts of capital compared to a credit card. Typically with consumer credit cards, especially the low-end, no annual fee credit cards, max you're going to be able to get on those credit cards is $15,000, unless you upgrade the card to, let's say, a CIBC dividend card to where you can get higher limits. But usually most people aren't going to be able to surpass 15K with those base limit credit cards. With a loan, depending on what you're getting, let's just say even with a mortgage, everyone knows across Canada mortgages are extremely expensive. You're not getting a house, and most people aren't getting a house under 500K, especially if you live in Ontario, or if you're here in Quebec, you may get lucky. But with a loan, you're able to get access to higher amounts of capital, because typically with loans, there's a reason associated to you getting that loan, whether it's to renovation, you getting an auto loan, you getting a mortgage, or you taking a family vacation. You can even get a loan for a family vacation. Okay, but again, you have a reason and a purpose behind that loan, and you can get a dollar amount for that reason or purpose. With a credit card, it's going to be more for a day-to-day use. And the bank can't say this individual is getting this credit card to go do X, Y, and Z. So typically credit cards, they kind of have a standardized approach towards the limits that you have around them. So with everyone that has, let's say, the CIBC Dividend Visa, most people that have that card are within a typical income range, and they have a pretty much a same set of limit for that credit card. So it's important that you understand the differences between you getting a credit card, how it's going to impact your credit, versus you getting a loan and how it's going to impact your credit. But typically when you're in the process of rebuilding your credit, or you want to have this long lasting credit history, a credit card is always the best place to start because, again, it stays open as long as you decide to have it open. And when it comes to loans, you getting a loan is because there's a purpose behind this loan. You're saying, I am trying to get this auto loan, I am trying to go on this vacation, I am trying to get this mortgage, whatever it may be, there's a purpose behind that loan. With credit cards, it can be used for everyday purposes. You have business credit cards you can use for business purposes, but you don't have to specify why you're making these purchases, which is why that may be a little bit advantageous for people that get a credit card over trying to get a loan. Okay, because again, it's usually a lot easier to get a credit card over getting a loan. Usually, getting a credit card is you filling out an application online, and then you're pretty much good to go. Typically with loans, especially if it's just a standard loan and you're not really specifying, let's say if it's outside of a mortgage or an auto loan, you need to speak with the banker and let them know what the purpose of the loan is. And so you kind of have to jump through more loops and hoops in order for you to get access to that loan. Okay, so hopefully you found this video extremely helpful. If you don't, again, my name is Kenny Johnson. We operate a credit repair company here in Montreal, Quebec. You can always email us info@kennyjohnsonuniversity.com. We'll be more than happy to assist you, more than happy to help you. And until next time, peace.